Welcome back, everyone. Week 4, this would be, but I kind of skipped last week. I apologize, but I don't really have a reason why I did. I just didn't really feel like it, I guess. But this week, we're covering futures. So instead of making the slideshow, I'm kind of just gonna just try and cover everything, hopefully. Just gonna try and talk it through instead of going through a slideshow, reading the slides I typed out. I'm just gonna try and cover everything. Maybe will be a little bit easier to understand instead of just reading words, actually looking at the same time. I don't know. We'll try it out. We'll see. We'll see how it goes. All right. So this first part we'll go over. It'll be a little confusing to explain, but it should be. I'll try to make it understandable. So futures, starting off, futures you can't trade like regular stocks. So you can't trade like Tesla or Apple or Amazon or just like regular individual stocks. You can only trade. Here's like a list of all the futures you can trade. So currencies like U.S. dollar, Bitcoin, Ethereum. You can trade energies like crude oil, financials, like bonds, notes, grains. You could trade like corn and soybean and um, wheat, other stuff like that. Then indices. This is what I trade, specifically the Nasdaq 100. So that's what I'll be covering because that's the only thing I trade futures with. But you could also trade livestock, I guess, and metals. Metals are popular on platinum, gold, silver, softs, orange juice. You could trade orange juice if you wanted to. I wouldn't recommend it, but you could give it a shot, I guess. But indices. So I trade the Nasdaq 100. So that is QQQ. It's the same thing. But so going back here, this is the Nasdaq 100 or NQ. So you'll see over here, it'll say 18,000. That's not like the price per se. For futures, it moves in points or like ticks, they'll call it. So each time it moves up one, if you look over here on the right, as I move my mouse up, it's going up 0.25 at a time. So those are each ticks. So see, let me bring out. So if I put this at 18,924, and then if it moved up, let's say one full tick, that would be to 18,925. So that's one right there, and then it's divided up into 0.25s. Now this is important because each time it moves up one whole number, that's 20. If you have one contract, that's equal to $20, a $20 move, or $5 for each tick. So here, I know this is a little confusing, but so if we're here at 18,920, and when it moves up to 920.5, that's $5 for each contract you have. Then it's, if you move up one more, then another $5, then the 0.75, and then once you get up to 921, if you had one contract, that move right there, even though it's like just, I'm barely moving my mouse right here, just that little move, that'd be $20 per contract that you have. Now, there's also, you can trade what's called MNQ, micro, right here, micro NQ. So that's going to be 1/10, or no, yeah, 1/10 of the size of a regular NQ contract, right? So that's what I'd recommend starting off on. That's what I did at least, because that way, instead of or getting one contract at NQ's price, so like in that small move, you could lose money pretty quick. But if you use the micros, for that same move that I showed you, that would be like this tiny move, that would be $20 with like one contract. If you got a micro NQ, that same move would only be $2. So you won't make as much, but when you're first starting off, you won't lose as much either. It's good to start off on. you don't want to over leverage yourself. You don't want to put in too much and be risking too much, because you don't want to lose your account off of one wrong trade. You can build your account up slowly, have proper risk management. We'll do that. That'll be a separate video, psychology and like risk management and trading. But I would start with the micro NQ for sure. You do like 2 or 3 minis, because they're called minis and micros. So the bigger ones are minis, smaller ones are micros. So I meant do like 2 or 3 micros to start off on. I wouldn't touch minis. I'll show you what that looks like in a moment here. Let me think. Alright, so I'll go into, futures, you kind of need a lot of capital to start out with to really start to see a profit. So a go-to for a lot of people is funded accounts. I use Apex. There's pros and cons, just like everything. The con to using a funded account is you have to pass like a trial phase to like prove that you can trade. Second, you can only withdraw money at certain times of the month. I think it's like twice a month. Yeah, it's twice a month. And I mean, a big pro to it though is like you can trade with, it's down here. You can trade with like $150,000, $250,000, and they have a 90% off sale going on right now. So like it's easier to like make more substantial money quicker, because if you're using your own money, first off, you don't want to be when you first start putting all your own money into it, because if you don't know what you're doing or you're just starting out, you don't want to be putting all your money into this in case you lose it. But you could use their money, and you wouldn't have to worry about that. So that's a good way to start out. That's what I use. But down here, if you were to buy an account, I buy the Tradovate ones. That's the brokerage I use for trading futures, and we'll go in and I'll show you what that looks like right now. Alright, so I know it probably looks a little weird right now how this is, but just above this where you can't see where my mouse is, that's my my account value and how much I have and stuff, and like some personal information. So that's why I have it cut off. That's why it's like blacked out at the bottom. But so here we are. This is what it looks like. It may look a little confusing at first, but I promise it's not too bad. So I don't look at the charts on here, honestly. This is what I use TradingView for. This is where I still do all my charts. I just place my trades on here. So it's a lot simpler than options. If you guys watched the last video about calls and puts and theta and all that, futures is much simpler. All it is buy and sell, and sell and buy. So I mentioned it before, but you can make money when the market goes up and when it goes down. It's a little bit confusing that you'd be able to make money when it goes down, but honestly, I don't really know how to explain it. You can think of it, so you typically, right, you buy when it's lower and then you'd sell it. So if I bought here and then I sold it, I make that money, right, because it went up. And then when you want to make money going down, you just do the opposite. Instead of buying it first, you sell it first. So I'd be up here, I could sell it, and then when it moves down, then I buy it back. It's a weird concept to think about, but you can think of it like maybe borrowing. You're borrowing something and then giving it back to them later. I don't really know, honestly. I just do it and it works. But so this is regular NQ, right? Just here's like the contract sizing. So like this is one NQ contract. So like every time it would move like from where this line's at to where my mouse is at, that would be a $20 move right there off one contract. But up here, if you hit this new tab button, you can search. And what I recommend is typing MNQ, and then it would be M4 for right now, I believe. and then when they move, there won't be a huge, you won't be risking as much when you're first starting out, and you can just see how it works, get to understand it. So up here at the top, this is like how you place your orders, right? So you can buy, bid, buy, market. What the difference is when you buy bid, so if this is the current price, right? Buying the bid would be like one tick below it. So that would be like, you hope it moves down one more and then shoots up. Or you can buy market, which would be the current prices that it's at. So buying bid, you get like a better fill, but buying market is when you want to get in instantly. And then it would be this opposite for selling, right? Sell ask would be one tick above the current price, and sell market would be the current price. So, depending on what situation you're in, you could use either one. It depends. If you didn't want to press these at all, though, if you want to set limit orders, you can go down here, say I want to buy in when price reaches here. You can just click it with your mouse, and then you can hit buy one or sell one if you're trying to sell. What else is there? So when you're in a trade, right, and you just want to get out, up here you hit exit, cancel all and exit. This is what I always do, like when I'm done the trade, when I'm getting out the last one, you say yes, and it just closes out the position you're in. And if you have any orders, like if I have
order rejected,
it's a holiday, so it's not going to let me trade, but you'll have like multiple like limits or orders set when you're in a trade. But if, when you're hopping out, you can just hit cancel all and exit, and then it closes everything out. Then you don't have to worry about anything else. You can set stop losses and profit automatically. So if I were to enter a trade, right, it would have a 10-point stop and profit. 10 points if with one contract is equal to $200. So if I were to buy one contract and move 10 points, that would be a $200 profit. Honestly, I don't know if there's anything else I have to go over. Like I said, futures is much easier than options. A lot less complicated. When you were looking at options, right, you see all the different strike prices, the calls and the puts, and there's a lot of numbers going on. But this, it's pretty simple. You just buy and sell. That's about it. Yeah, let me think if there's anything else. Honestly, there's nothing else I can really think of. I would just say you can use Tradevate from your phone. I wouldn't recommend it, but sometimes, if you're on the go. But again, don't look at these charts. Don't try and read these charts. Always just use TradingView. That's what I do at least. So if I see a potential trade, what's nice, you can set up notifications, so you can add an alert. So you can put an alert, and then if price reaches this level, I'd get a notification. Then if you're out and about, and this is an area you want to enter a trade, then you could open up Tradevate on your phone and place it from there if you wanted to. But again, I would do the computer if that's available to you. I know I mentioned this in one of my earlier videos, but NinjaTrader, here, I can move this screen back down now. NinjaTrader, I know you can do a 14-day free trial. Let's see if I can find it here. Yeah, here it is. No, that's not. Let me look it up for you guys real quick. You can do a 14-day free trial. Just, it's a little bit different than Tradevate, but honestly, not by much. I don't believe. It's been a while, but yeah, here you can. Yeah, here it is. You can get started. You get a free 14-day free trial on a fake account. They'll give you $100,000 or something like that, and you can just test it out, see how it works. See how the money moves. So then, before you get a real account, you can see how many contracts you want to use, what kind of sizing. So you're not going in putting too much money or risking any money at all, and just get a feel for it. That's what I would do. You just hit get started and then enter your email. And after 14 days, what you could do is just make a new email and then sign up again if you wanted to. Yeah. I think that's about it. I'm going to try and post another video this week, hopefully. Going into my strategies, because I have two different strategies I use right now. The one is the option strategy. That's why I was covering options. And then the second one's a future one. The future one's like more of my go-to strategy. That's the one I'm a little bit more aggressive with. The option one, it's like here and there if I see a good setup. I don't use both every day, but we'll get into that in the next couple videos, I believe. Yeah, I think the next one we'll do my options strategy and then my future strategy. My future strategy much better. And to specify, you can't. My option strategy is like specifically meant for options. My future ones is meant for futures. So I wouldn't recommend at all trying like my future strategy with options or my option strategy with futures. I wouldn't recommend that. I mean, you probably still have success, but again, like I wouldn't do it. But we'll get into that in the next video. And another difference, when I trade futures, I trade NQ, the NASDAQ. When I trade options, I trade SPY. But yeah, we'll get into that in the next video. Hopefully, I'll make it soon and go over the options one first, because it's a little bit easier to understand. The futures one's a little more complicated, but that should be the next video, so look out for that. And then that'll be the fun stuff, getting to actually trading and what I'm looking for. But until then, have a good Memorial Day, everyone, and stay safe.